The bank reporting season is almost upon us. Given the context of low interest rates, rising credit risk, especially from China in an ever-increasingly connected world, and creeping regulation, what's the outlook for the global banking sector? Wei Li, Head of Investment Strategy at EMEA, iShares, BlackRock, joined us now with some more analysis. There appear, more than ever, more headwinds for the banking sector from a number of different areas. How healthy is the banking sector? How able is the sector to cope with the headwind?
Absolutely. So there are definitely a lot of concern around first the quality of assets the banks have on their book, and also in terms of the broader low rate environment, what that means for the profitability outlook for the banking sector, especially in developed markets where rates are expected to stay low for a very long time. And if you think about how markets have been evaluating these concerns that markets have about the banking sector, the result is not great in the sense that banks have been underperforming the broader market year to date, in the case of Europe, by a significant amount. So I would also observe that a lot is also in the price, but then the question arises as uncertainty drags on, how much more surprises would we have?
One of the interesting headlines that came out of a recent Mario Draghi speech, he was saying that in fact it's not low interest rates that's the problem, it's the fact there's too many banks, especially in Europe. There's just too many banks out there. What's this low interest rate environment, too many banks argument? How's that seat with you?
In terms of from his perspective, from Mr. Draghi's perspective, I think he would like to see greater consolidation amongst the banking sector in Europe. But the reality is there are all sorts of legacy reasons why that is very, very hard to happen. In the case of Germany, for example, the competition between big banks and regional banks, they are here to stay. And probably in our lifetime, we won't see a proper consolidation resolution of that. In the case of Italy, there are also a very fragmented banking system in both on a kind of municipal level and also on a national level, which is also why earlier on we have UniCredit very much in the headline. The reality is there will always be chatters and reasons why banks should go through consolidation. Earlier this summer we had chatters about Commerzbank and DB, what they could do there, but it will take very long and it will be very challenging for that to happen. With regards to the low rates and what that means for the banking sector, of course Mr. Draghi has brought rates down to the current minus 40 bips, and he, from his perspective, definitely wants to take some light off in terms of the pressure that low rates has on the banking profitability. The reality is we see coming through in the earnings downgrade for the banking sector in particular. Analysts are not very optimistic about both the level of rates but also the shape of the yield curve. In Europe it's still very, very flat. The long end backs up a little bit and we have the lifers and the pension funds coming back in. So it's both the flat low levels of interest rates have been posing significant challenges for banking sector outlook, and that is likely going to be here to stay.
Going back as well to the comment I made at the top about the ever connected world where banks have a lot of interest in other banks around the world. It's a global network really of banks, and continuing worries about the amount of debt that some Chinese banks have. How is that going to affect the West? I mean, China looking at the moment as though it's able to cope with that, but if there is a big concern starting to build up and a worry about this, what sort of banks are going to be affected by that? Whereabouts is the big pressure point going to be lifted?
Banks make up a huge percentage, I believe is around more than 50% of the major indices in China. So the big country index in China, a lot of them are made up of bank and financial names, which is why banking concern, especially around non-performing loan that these banks have been weighing on sentiment towards Chinese equity market. But so far this year, if you look at how China has fared, both on the macro basis but also on the equity performance basis, it's starting to be in the headline for the right reason. No longer China is kind of in the headline because of uncertainty around currency, uncertainty around non-performing loan. More and more focus is around stabilization of growth. So non-performing loan is a issue, definitely, especially later down the line as Chinese economy goes go through supply side reform with authorities also addressing some of the inefficiencies on the big state-owned enterprises. But we have done this analysis looking at kind of the percentage of non-performing loans that Chinese banks have. The big banks, the likes of Bank of China, the big ones that are heavily represented in the index, have now reduced their non-performing loan exposure to now almost less than 1%. It's the small and medium ones that are facing greater challenges, but at the same time they are less represented in the broader index. So more and more we are becoming reasonably favorable towards this market, also because some of the key concerns that investors had earlier this year seems to have been alleviating. And you're absolutely right in terms of the interconnected nature of world economy, especially through kind of also the banking sector. What's happening in China will have ramification in what's happening in broader emerging market, which then have ramification more broadly as well.
But of course, add to that the fact that we've got different regulatory bodies around the world doing different sorts of things. It makes for a very complicated picture, doesn't it? I mean, in Deutsche Bank recently we heard the news that Germany's not going to bail out Deutsche Bank if it's needed. The European market, it seems to be very different from the rest of the world. How different are European banks situated with regard to the outlook than US banks?
That's a very interesting one. Both the banking sectors are coming on the challenges, but for different reasons. So bailing out banks, this topic of bank bailout in Europe is always very controversial, and there are rules in place for obvious bailout process. So that, together with the low rate environment that we're talking about, are the challenges for not only German banks, but Italian banks and some of the peripheral banks as well. So this is the setting for European banking sector. And then in the US, while US banks have gone through some of the harder rebalancing work in terms of deleveraging and now being able to leverage up again. So from a kind of a cycle where they are, from that perspective, they are in a better position than European banks, also because US rates are a bit higher and long end especially as well. But we are going into US election, and both candidates have talked about the need for greater regulation, specifically around the banking sector. So there are other challenges facing US banks, and as a result of that, globally banking sectors as a whole is an area that we would stay away from.
One final question is about the banking sector as a whole. Is it able to withstand another financial crisis like we had in 2008, or do you fear that there are still cracks there?
There are definitely questions around the efficacy of the transmission mechanism, especially in Europe, because Europe is an area where bank lending has been acting as the main channel of kind of feeding through to the real economy. We have done this analysis looking at banks' performance and how that done with a 12-month lag impacts the lending volume and demand, and there is a very close correlation between the two. So if you think about how banks have performed so far this year, in our point of view, that is going to be dampening kind of credit generation capability of the European economies with a bit of a lag next year and potentially even beyond as well. So a solid banking sector is very, very key for us to be more positive around the economic outlook. The same can be said about the US banks in the sense that a lot of companies are able to also tap into the open market. So banking sector resilience is one consideration, but if the broader appetite for credit issuance is strong, companies can still find their way around.
Okay, all right. Wei, thanks indeed there for joining us. Wei Li, Head of Investment Strategy at EMEA iShares BlackRock, talking there about the banking sector as we approach another earnings season.